Hello, this is Eric Parnell, Chief Market Strategist of Great Valley Advisor Group. And it's that time of year again. It's almost Thanksgiving, we're heading into the holiday season, and it's that good seasonal time of the year for investment markets. Now, it wasn't that long ago on October 30th that we were seeing stocks and bonds falling to the downside with seemingly no bottom in sight. But once we hit the end of October, the bulls got released and we've seen a huge surge to the upside over the last few weeks. Now, a lot of technical progress was made on the equity market side. When stocks bottomed on October 30th, they had hit the long-term 400-day moving average, which is a key support level for stocks. Since that time, we saw an explosion to the upside in stock prices, breaking through resistance levels at the 200-day moving average, and even more so importantly at the 50-day moving average, which had been resistance going all the way back to earlier in the year. Now, stocks are holding above this key resistance level at the 50-day moving average, which is important. And as we go into the weeks leading up to Thanksgiving, there's good reason to think that stocks have more room to move to the upside. Well, what about the bond market? Because the bond market's had a tough last couple of years, but there's also good reason for optimism on the bond market side. We've seen Treasury yields try to make a run through 5% back in earlier in October, and they couldn't make it above 5%. That's good news for bonds because, as we know, as yields go higher, prices go lower. Well, since that time, we've seen the 10-year Treasury yield move lower from 5% and subsequently broke through a key resistance level at its own 50-day moving average, which was at 4.56%. Now, we did see a hiccup last Thursday with a bad Treasury auction that pulled yields higher, but the overall trend here that we've seen over the last several weeks is expectations for a continued move lower in Treasury yields. This is positive not only for the bond market, but also for the stock market. Because if Treasury yields continue to fall, that's going to provide an added boost behind stocks that are already benefiting from stronger corporate earnings and widening corporate profit margins, as well as an economy that continues to hold its own. Thanks for joining me for this latest market insight, and I look forward to seeing you again soon.